You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market. From unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike TOSAW from RCM Asset Management, Andrew the Rock Lobster GIOVINAZZI from OptionFit.com, and Mark the Greasy Meatball Sebastian from OptionFit.com. The Option Block is brought to you by Fidelity Investments. Fidelity's Option Trade Builder tool can help you confidently build an options trade in 3 simple steps. Just choose a strategy, select a contract, and then review the benefits and risks of the trade. Learn more about Option Trade Builder at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC. And now, get ready to hit the Option Block.
All right, everybody. That music can mean only one thing. It is time once again for the Option Block. My name is Mark Longo from the OptionsInsider.com, as well as, of course, on the ever-exciting Options Insider Radio Network. If I sound back to normal, it's because I'm back here in scenic and sunny Chicago, back from D.C., from the STA Market Structure Conference. A lot of great content about ready to unspool for you folks on the network. We already did TWIFO and Vol Views and OB from down there. Hopefully you enjoyed that. Got to actually cut in some guests onto TWIFO. That was kind of fun. So stay tuned for more content coming from that show as we speak. So it should be hitting the network any second now. So stay tuned for that. And of course, as always, you can join us Monday and Thursday, noon Central, 1 p.m. Eastern, via the old Mixlrs, MIXLR. Grab it, set it and forget it. Grab that link, and you're off to the races. You know what else is off to the races? Our show. Let's get my panel going here to join me on the old program. Let's start. He's back once again, holding down the Fidelity hot seat. The last emperor himself, Mr. Konstantin VRANDOPULO from the Active Trader Strategy Desk over there at Fidelity. You know, Mr. Last Emperor, I do believe you promised a rare dual appearance last week, and it was not to be. What happened, sir?
I certainly did. Guys, I apologize. Was a little bit of a toss-up, I guess, from the perspective of other guys getting a little jealous of me doing 3 in a row. So Colin stepped up. I definitely didn't want to be pressing my luck there against other colleagues of mine, esteemed colleagues, I should say.
Deeply esteemed.
Because nobody else could do Monday. I'm here today.
There we go. Holding down the hot seat yet again. And also joining us, I believe, what do we say it should be? It should be the cold lobster, Mr. Andrew Giovinazzi from OptionPit.com by way of Carmen Line Capital. Mr. Cold Lobster, how go things in your neck of the woods, sir?
You mean cold northern Maine lobster?
Something like that. Not being a lobster guy myself, I'm not sure.
Fall is here. I'm just saying it usually arrives on the button around like September 29th or 28th. And it becomes starting like you can feel the old man winter is coming already. So, I mean, we'll have a couple of nice days in October, sunny, nice. But, so anyway, the water is starting to look cold and scary, but good for lobsters.
There you go, sir. Yeah, you wouldn't know. Last week in D.C., it was like 93 degrees in D.C. all week. So, yeah, fall comes in with a whimper, I guess, this year. And also coming in with a whimper, really, we hope not. We hope it comes in with a roar. I guess we'll find out. He is Uncle Mike TOSAW from St. Charles Wealth Management. Uncle Mike, welcome back to the show, sir. How are you doing? Is it a whimper or a roar kind of day, sir?
I'm a Missouri Southern Lion. You darn well bet it's going to be a roar.
All right. I like it then. We're roaring as we keep on rolling right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the trading block.
All right, everybody. Let's see what we got after a weird week. I think that's the best way to describe what the heck was happening last week. Of course, you saw that big sell-off last Wednesday, one of the largest we've seen since pretty much the end of August, about the 23rd or so. So that was over a month, in change in a relatively turbulent period in the marketplace. So that meant something. We saw VIX cash popping back up over the 20 handle, got up to around 21.5 or so, I believe. And things were topsy-turvy. Then towards the latter portion of the week, it was all roses. Everything was rally-ho mode yet again. All was right with the world. Vol came and it went. And it's today, coming into today's show, it is kind of mixed. We were kind of mixed on the day. It seems like things are trending to the south here now a little bit. The Dow and the S&P both off about 0.1%. Not a ton, but more than they were right before showtime here. So maybe the worm turning a wee little bit. We'll have to wait and see. NASDAQ is literally unched on the day, so we'll have to wait a little bit longer there. Gold off a little bit, about 0.5%. And crude oil, after having been drubbed, I think is a technical term, still well shy of 55. WTI at about 53.60, so up about 1.5% or about 80 cents today. But I think we've proven already out there in the crude oil market that the crude market doesn't care about what's going on in the Middle East or anywhere else these days. It's kind of a weird beast out there in the crude. It dances to the beat of its own drum, just like Uncle Mike. Let's see what's trading out here in the broad markets coming into showtime here. Decently active day. We're seeing, by the way, our old friend VIX Cash, of course, at about a 17. It kind of bottomed out right around that, so close to that. Actually, 17, I believe, was pretty much the bottom of the day, about 17.02. Then it has turned from that up to about 17.15 or so. Right now, it puts it down close to 3 handles from where it was last show. Our old friend VVIX also off a bit, about 96.5. So still elevated, still threatening that triple-digit level, but not quite to the frothy, surging beast it was this time last week. And our old friend VXX giving up a little bit of the ghost. VXX at 24, down about 2 handles from last show. Let's go back around the horn the way we came. I should say the opposite of the way we came. Let's mix it up a little bit. Let's go out to Uncle Mike first. Uncle Mike, sir, what is lighting up your tape in this roaring type of market?
The roaring type of market. Well, ultimately, it's a market. This would be a nice day trading market today, in that we opened down, we're going back up, and there's a lot of movement. But ultimately, the S&P is down 4 points. We really don't have a lot of movement from the close on Friday. I mean, we have had a lot of ups and downs, but we're kind of in the same spot. I think that we had a really nice rally on Friday. And it's one where the 3,000 magnet is coming again, in that we went down a little bit. And I think that 3,000 is not saying we're going to go up or go down, or I guess I give you my 50% guarantee that I always do. But I think 3,000 is a key number, and that we're coming back to it right now, or at least we're being drawn towards it from the pullback that we had. We did have the big one, a bigger pullback last week, but it does appear that we are coming back towards it. I'm going to talk a little bit more about this in the strategy block, if possible, if not today, another day, but just the importance of managing risk when we have a lot of choppiness like we've had in the marketplace over the course of the last couple of weeks when you're selling premium. That's something that's very important. We are below the 20 VIX again, of course. That got taken out last week into the 17 level, but we're still at high enough levels from a standpoint of volatility to where there might be some attractive premium sales out there if you're bearish on volatility and you want to collect some time value. We'd have some gains today with Apple up $1.80. That's one thing with which I'm looking at. But other than that, for the most part, everything across what I typically look at, not a lot of movement from point to point, but definitely a lot of movement in the middle from last night's futures that opened down quite a bit right away, but then came back right away after the first print. And a lot happening, but not a lot of headway, if that makes any sense.
It makes no sense, sir. I am muting you henceforth for the rest of the show. No, of course. I am joking. Let's see if we can get the Rock Lobster to make sense as well. Mr. Rock Lobster, a.k.a. I should say the cold water lobster, whatever the heck you guys call it up there in the far frozen north there. What is lighting up your tape today, sir?
Cold water lobster does not sound as catchy as rock lobster.
Definitely not.
But
I've done you a favor there, sir. You should blame the last emperor trying to sully your good nickname.
I am so sorry for casting that shadow. It was just a question, that I had. But I agree with you. Rock lobster does sound a lot more. It's got more oomph to it.
Now it's out there. Whenever I say rock lobster, cold water lobster is always lingering in the back of my mind now. It's sullied forever, sir.
That's part of being a guest host on the show, Konstantin. You get to if you don't spend a little time messing with Longo, it really isn't worth the fun of being on the show. You have to be able to toss something on them every once in a while. Cold. But anyway, VIX. I think it feels like vol is coming in. For people that follow volatility or markets. So I start pricing an iron condor to sell in the morning, and I want to see where the pricing is by midday. And so far, the bid is just kind of slowly going away relative to where we closed on Friday. So it feels like the bid for vol is starting to subside. That would be, even though VIX is up a little for the day, I think because of the weekend, effect, it's actually not down, at least as of right now, as of showtime. I guess, but Overby's still trying to claim his VIX number, right, for the settle on.
I'm sure he'll come back to me if we pop again this week, and he'll be like, I meant it for 2 weeks.
But there's Chinese buying soybeans. That's all everybody needs. They just need the Chinese to buy a couple $1 billion worth of soybeans, and all's right with the world. It doesn't sound like there's any new tweets this weekend, besides withdrawing from Turkey, stuff like that. I don't know if it's causing a lot of headline headaches, but for now, I think we're at this, like TOSAW said, this 3,000 level. We need some good news to make new highs, and low unemployment's pretty good news. Although you would never hear that from the media, you would never know, So I think, part of this is, people start to believe bad news after a while, even though a lot of the news is good. And, stocks kind of, I don't think they're extremely as high priced as they've been in the past. We've seen that. They're not, I don't think they're cheap, probably somewhere in the middle. But I think at this point, we need a reason to rally. They can cut rates a little more, but not too much more. And I think some of these block things, you've got this constant political thing, which is contributing to VIX somewhat. But overall, the reality is, like TOSAW said, we're down 5-6 handles today. And, in order for VIX to stay at a 17, we have to be moving a little bit. At least for right now, not much is happening.
Not much is happening right now, indeed. We'll see what's happening over there on the Fidelity platform, Mr. Last Emperor, sir. What are your folks up to? What are they slinging on this relatively quiet day in the market, sir?
Yeah, guys, I'll be honest with you. I woke up this morning. I didn't think that it was going to be a quiet day, just given kind of the headlines that were hitting the tape. late into Sunday night, maybe just a souring sentiment of a potential broad deal or whatever the case might be with the Chinese delegation coming later this week. I think the negotiation, or they come to the negotiation table on Thursday. Probably will be talking Thursday and Friday. So, the futures opened up down, and it's uncanny, right? How, the market is able to recover. I mean, pretty much in the earlier hours of the morning, we took back all of the losses that the futures market showed. Coming into the day, into the opening rotation, already halved those losses in the futures. What I found interesting is that the S&P did tag the lower boundary of where we were in the futures market. So the cash market did travel there, and from that point recovered all the way back. So, so far so good. What I can tell you is from Fidelity's client's perspective, there are a few names that are actually moving on a relatively benign tape. Number one stock, and it has been, in the top three for sure for probably about 2 weeks at this point, is Apple. Apple did hit a new 52-week high. I think that the all-time high in Apple was on October 3rd of 2018. That was 232.07. Today, intraday, we hit a 52-week high. So that's probably a good number, right? 229.57 being that number. And I believe right around 229, Apple gets above its $1 trillion market cap mark. So, one of the stocks that I think that, has been showing relative strength here as of late. I will tell you, though, I continuously do mention the fact that Fidelity clients tend to be on the sell side of this name, and it has been the case for a while. Today, that trend continues, 62% sells to 38% buys, probably a little bit even heavier to the sell side. Stock was up around 1% on the day, though, started really moving last week on the news of potential increases in iPhone sales and the demand for them in general. So some remnants of that out there. Stock is performing, like I mentioned, very well. What I also find interesting is that it continues to expand, right? Its implied volatility metrics. So the supply and demand equation out there in the open market is changing. There's some paper being traded in Apple, especially last week. We saw some serious paper in the monthlies out there in November. But a few things. There's probably going to be some back and forth between analysts. I did see, I think it was Nomura today, obviously an investment bank that a lot of gains or gets a lot of foreign exposure, especially, raising its price target from 185 to 205 and reiterating basically neutral. And I find that interesting because, if you had a 185 12-month price target, for quite some time. Now that the stock is at 230, you're raising it 205. Again, maybe, didn't really pan out, I guess, for maybe a more neutral view on it, at least so far. The stock price has proven that particular investment bank or investment analyst wrong. The second name that I wanted to talk about that has been off the radar for quite some time is NVIDIA. So NVIDIA today is up 1.6%. This is the stock that had a tremendous drop in the fourth quarter of 2018. So it went from 290 to all the way to 130. So it just a huge decline in the fourth quarter. And ever since then, it's been having a tough time finding legs to the upside. So trading up against the 190 relative level of most recent resistance with slightly lower highs along the way. So it's kind of forming this bottoming wedge, what we would call as technicians. But of course, knocking on that door of resistance right around 185, 190, in order for something positive to occur, that resistance needs to break. So what I'm paying attention to, Fidelity clients are 50-50 buys and sells right now. Implied volatility in this stock, at least looking out 30 days, is at around 38. And, it has been very flat for the past 2 or 3 weeks. Now, I know that it's not trading much greater volume than average 90-day ADV today, but I find this particular name and its competitor, AMD, which is by orders and by Fidelity customers today, kind of these two chip names out there. I'm wondering if people are trying to position themselves for one way or the other on their beliefs of what might potentially come of these Chinese trade talks. Towards the end of the week, I saw implied volatility in the Philly Semiconductor ETF starting to creep up a little bit. AMD being the largest competitor of NVDA has actually performed quite well. So if you look at a 2-year chart of AMD, it was just going into last earnings in July, on July 30th, was basically trading at a new high. Has pulled back some since then, but hung in there a lot better than NVIDIA has. AMD, similarly, I would say, by Fidelity customers, 50-50 with rising implied volatility. So those are a couple of names that have been kind of missing. I know that AMD generally does quite a bit in options volume as well. But I figured, that battle, the comparison between NVIDIA and AMD might be back on our radars here for the near future. The last one that I find interesting, I do believe that there was an analyst upgrade this morning on this name, is Uber. Uber is moving 2.4% to the upside, trading at $30.38 right now. I believe it was Citibank who upgraded them to a buy from a neutral with a price target of $45. Now, $45, as everyone remembers, was the IPO price in Uber. For a couple of months, once it's gone IPO, it couldn't quite get above there. I think it eventually did, looking at a chart here quickly, back in July, peaked above that 45 level for a couple of days, fell right back into range, traded sideways, and then just collapsed. So losing 34% of market cap since going public, at least since the IPO price, has been obviously pretty devastating for a lot of investors. So now that Citi, upgrades it to a buy going into this new earnings cycle with a 45 price target, I find it interesting that they kind of see maybe value there where it initially went public a few quarters ago. In terms of Fidelity clients, looks like 52% buys to 48% sells right now, and it is pretty active by our customers today. Again, bucking the tape, up 2.4%. That sums it up for us, guys.
Thank you for that, sir. Let's see what sums it up for the rest of the options market here, what you guys are up to, what you're slinging, what's moving and shaking out there. Let's start in the broad indices. A decent day, all things considered, out there on the street, even though it was looking kind of quiet. We're seeing the VIX a little bit shy of 250,000 contracts. That puts it a little bit less than half of its ADV. So maybe on track to hit its ADV today, even though I'd probably be surprised unless this worm turning narrative continues. SPY at about 1.5 million, the ADV about 3.25 million, so a little bit shy, but close to half of its ADV as well. S at about 525,000, the ADV about almost 1.5 million, so a little light there. The Q's 212,000, the ADV nearly 700K, so also light out in NASDAQ land, and that's not surprising. NASDAQ was unched coming into showtime. And the Russell at 181,000, the ADV about 530,000, so a little light there as well. Also light on the top 10s. Doesn't take a heck of a lot to break into the top 10 on the individual equity options today. Number 10 is our old friend RIG, which We'll be talking about them in a little bit, and I think I know why they're in the top 10. We'll be getting to that in a little bit as well. It only takes 80K to make it into the top 10 today with Rig number 10. Number 9, Microsoft, 81,000. Taking the number 9 spot. Number 8, Facebook, 87,000. Number 7, Netflix, 90,000. Number 6, good old Roku, 94K. Number 5, NVIDIA, 98K. Number 4, AMD. I'm hearing a bit of an echo from what Konstantin was just saying a few minutes ago. AMD at 120,000. Number 3, Tesla, $126. Number 2, good old Baba back up there. Number 2, 128,000. And then once again, pulling away from the pack, just crushing everybody else. Apple, 362,000. It is an interesting question to wonder what would have been like in the brokerage space over the last 5, and the options market in general, if Apple hadn't been just the volume beast that it has become. Everyone talks about its impact on technology, everything else, but certainly it's had a huge impact in the financial realm as well. Speaking of impact, we're seeing other weird things going on today. Our buddies over there at ORATS are cranking out some interesting new things, including they're doing some unusual activity analysis and high volume analysis. One of the names they actually flagged today, which was kind of interesting, didn't come across our radar, but it came across theirs from a net overall volume perspective. It's WWE, our old friend WWE, aka World Wrestling Entertainment. Right now, let's see, where are they? Well, they've turned quite a bit. When this alert came out this morning, they were trading 71.25, up 1.5%. Now they've turned quite a bit. They're down 75 cents to about 69.5. So wow, they've sold off quite a bit, off $2 from their high earlier today, which is I was kind of surprised to see them rallying because they've had most of the news in their neck of the woods has been bad of late. My little guy's a bit of a WWE fan, so yes, we have the network, and we did watch the pay-per-view last night, and I think is going to go down in infamy as one of their least popular, certainly most controversial pay-per-views of all time. Crowd chanting refund at the end of the event and everything, and hashtag canceled WWE Network trending globally on Twitter today. I don't think that was a good one for them, and yet it was call volume that was leading the dance. 5,533 calls up there for a call-to-put ratio of 250.2 to 1. Wow. That's pretty aggressive. Most of the love was out there on the Nove 70 calls. So go figure. People had some upside love. Maybe they're using it as a chance to overwrite out there. I don't know. Either way, interesting stuff out there for WWE as the worm appears to be turning out there. And then, you know what? Our show is turning because it's time for us to turn right on into the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, that bit of funky tunage means it's time to get funky on the show with the Odd Block. And let's kick it off. Remember I said, pay attention, remember that name, Rig, because we're coming back to it. Well, we're already there. Yeah, we're kicking it off here. The big print out here today in single names, at least from an Odd Block perspective. It's going up out here in Rig, a.k.a. Transocean Limited, a.k.a. the world's second largest offshore drilling contractor, based in Switzerland, if you're curious where they're headquartered these days. They have offices in 20 countries, if you'd like to know. This is an interesting name, trading 4.25 today, so pretty cheap out there, up about 3 cents, so effectively unched on the day. Not a huge mover today. Over the course of the last year, they've seen, shall we say, some downside. A year ago, they were trading about $14, so they're well shy of that now. And they sold off pretty hard back in the nadir of the market. They sold off pretty quickly. From October of last year of 14, they got down to 6.5 by about Christmas Eve of last year. Then they kind of rallied up to about $8-9, kind of stayed in that range for a while, and they started selling off again back in May. They hit $9.65. That was their high back in April, and then they kind of just turned around from there. They were trading 5.5 by June, and then they hit $3.86 actually, so lower than they are now. Back in August, actually their low of the year is $3.76, which came around that late to mid-August timeframe. They kind of rallied again recently up to 6.5 again. So they've been moving, and right now at about 4.25 coming into showtime. So a very volatile, very turbulent name. Also kind of relates back to what we were just talking about earlier on last show, I believe, with cheap names, cheap options, and why we don't like them. Let's see what's up here today. Someone certainly likes them today to the tune of 30,000 of the May 3 puts going up for 50 cents on the offer. They were 47 at 50. Someone just gobbling all that up over there on our friends, the MIAX over there, opening up over there. So size love for puts, but that wasn't it. They weren't done. Coming into showtime, there were nearly 50,000, about 49,000 and change had gone up so far on the day. So somebody, Mr. Rock Lobster, deciding to draw a large protective line in the sand this time at the 3 strike. It's a good thing our friend the Viceroy is not on the program today with us, because I have a feeling, my spidey sense is telling me I don't think the Viceroy would like this one. 50 cents to protect yourself out to May in a $3, or actually, sorry, $4.25 stock now. Mr. Rock Lobster, do you have more of a favorable view of this one than the Viceroy probably would?
Another weird one, like, the stock's $3, $4, and you're buying the May 3 put. This rig is one of those, all of the offshore, the whole offshore drilling industry never recovered from that oil drop from $100 a barrel to where we are now at 50, 55, $54. Like the stock never recovered. It was like $80 or $90 stock, I think, and just it used to be a fun thing to trade, and now it's just kind of dead. I'm not sure why you would buy those puts. Like, what, you're buying a 50-cent put so you can make $2.50 if it goes into bankruptcy, and even then, even when the stocks are in bankruptcy, they're usually, they're $1 for a while. So, I mean, I guess you can, make a case for buying them, but it doesn't look like a very appetizing way unless you're totally sure that rig is going to go to zero, I guess. That would be the only thing I could think of. But it's not a lot of room, buying those puts for 50 cents.
Yeah.
To make any money.
Yeah, you only get till May even with that. You don't even get like a year or something on that. It's just, yeah, that one's a rough one to swallow. Yeah, I'm not sure anyone would buy those as the Rock Lobster. I can kind of concur. Those are pretty meaty. If you're that concerned with rig, obviously people could be, but if you're an executive at that point, you probably can't buy these puts either. So I don't know. It's a weird one. If you're a large underlying holder and you're that concerned about the downside in rig, maybe you should do something else other than waste a significant portion of the stock's remaining value on these puts. Maybe you sell it. Maybe you do other things. maybe you do something against these puts to help offset that cost. But yeah, that's a rough one here to swallow. Let's go see if our next one is a little bit more palatable to the masses. I know you guys love your size premium buying. Let's see if we can find you something else. Next up, we got Equitrans coming up on our Eye of Sauron, ticker symbol ETRN. This is a natural gas company, so a bit of a thematic energy theme, at least to our odd block here. Trading today 14 1/4, off about a dime or so. It's not a huge day for Equitrans either. So both of them having not really size underlying movements either. A year ago they were trading nearly $20, 19.5. So they were a wee bit north of where they are right now. Looks like they peaked out around 23 and change. That was back right before December, so we all know what happened in December. They hit that high, then they kind of sold off, and they kind of bounced around for a bit, got back up to about, they hit their low then of about 18.5, rallied back up to 21, then sold off again in March, back to 18, and then back up to 21 1/4, back in April, hung out there for a while, and then in June, the worm started turning. They got down to 19, 18, all the way down to 13 and change, so lower than where they are right now. Their 52-week low, actually 12.31, which has come sometime, looks like maybe late August, early September. And then they kind of have rallied from there. So in the last month and change, it's been a bit of a bullish story here for Equitrans, but net on the year, it is decidedly bearish. Let's see what we've got going on here, what lit up our tape. Longer term, looks like longer term call love, in particular the Jan 17 halves. Not that long term, out to Jan. Jan seems so far away, but it isn't that far away any longer. 2019 just flying by. 4,917 of these bad boys going up for 65 cents. These things were no bid pretty much at 85. So nice tight market on these ones. I think we can safely assume he bought these. This was opening over there on the box, actually. Box getting some love there. Don't see that one coming up there too often. Obviously, there are earnings between now and then, earnings on the 24th. By the way, our last name has earnings on the 28th of October, this one on the 24th of October, even though by the May, you're going to have a couple of cycles between now and then. These are Jan, though. Jan 65s opening to the upside. So Mr. Rock Lobster got some aggressive premium buys going on both of these names. It's a bit of a Sophie's choice here as to which one you like of these better, because I don't think either of these are particularly good. I guess if you had to go one route, which of these do you prefer? Far out of the money puts on a cheapy, crappy name, or a little bit closer out of the money calls on a not quite cheapy, crappy, but close name?
We've got a lot of cheapy, crappy. I think the Viceroy, his hat is blowing off his head right now. Maybe just in small dollar stocks. I don't know. Unless we can export about 1 jillion BTUs of natural gas next year, I don't see what the upside is unless the majors start acquiring properties or pipelines or whatever. But oh my gosh, no bid, a nickel bid at 85, you fill 5,000 at 65. My only assumption is, it does look like they're buying them, but you know as well as I do, most of these pipeline stocks, most of the deal is in, people riding them, taking the, kind of foregoing the upside and just using them as kind of an income strategy. And when was the last time we saw somebody buy calls in a natural gas stock?
Right before that big explosion to the upside, right? Other than that, not too many, no. Yeah, it's a weird one. We got some weird ones today. I guess that's one of these kind of quiet days. This is kind of what comes up on our Eye of Sauron. Our last one, I don't think our last one's gonna cleanse the palate at all, Mr. Rock Lobster. I think it's more of the same. It's a good thing. Good thing the Viceroy is no longer on the program. He would have had many issues with the entirety, I believe, of this odd block, including our last one. If those other two were too rich for your blood, don't worry. We got you covered here with our final name, OPKO Health, everyone's favorite, ticker symbol OPK. This is a medical test and medication company focused on diagnostics and pharmaceuticals. So there you go. And this is the name trading a whopping $2.12 today, off 3 cents, which for this name is a 1.5%. It's a big mover for today. This thing looks like a typical biotech type pharma name, because this freaking chart is just spike and sell off and spike and sell off. A year ago, it was trading about $3.70, got up to nearly $4. It looks like that was around October of last year, so mid-October. And then it kind of sold off again almost immediately to $3, and then back up to $4. And it did that dance quite a bit. Then it got down to $2.50 on Christmas Eve, and right back up again to about $4 again in January. So this thing's been all over the map. And then it turned back around aggressively again in January, back down to $2.75 in February. Then it kind of started this long, slow drift down to its recent nadir back in May of about $1.73. So it has rebounded a decent amount from there, almost 50 cents, but not a ton. So this is just a weird one. So let's see what people are actually trading out here, shall we? Oh, it's puts. I thought maybe they were swinging for the fences for the upside. Nope. They're paying through the nose to lock in more protection on a crappy downside $2 name. Yep, 2,765 of the Nove 2 puts. Yes, the 2-strike puts. Got to get that protection there. Paying a whopping 35 cents for those bad boys. So these were 20 at 35. The guy gobbled up the offer to get all of his protection. This is opening on the Philly. This doesn't even get him to May. Doesn't even get him to Jan. This is Nove. These are Nove. And that he wasn't done there. He did more. He did a total of nearly 5,000. So pretty much double that opening print. Mr. Rock Lobster, this is depressing. Find me some nugget of optimism in this print, sir.
You know what? You know what this all reminded me of this print? In The Princess Bride, when the guy is like, inconceivable, and Diego Montoya says, I do not think you know the meaning of that word. It's like, you don't, you're buying the puts on the stocks at $2. Like, it's going to take some work, man, to make some money on those. So either they know something unbelievable or they are not really thinking how these things work. A lot of times I think sometimes this paper could be strange because, it could be a line in the sand guy, big hedge fund customer, firm takes the other side and buys these junk puts at a decent price, but they'll go out and buy a ton of stock or something and try to do delta neutral or anything like that. But that's when I look at this. I go, oh, you're buying a put when the stock's at zero. It gets stuck in my mind somehow.
Yeah.
I don't think they went to the TOSAW school of put buying either.
You're buying horse insurance after the horse is gone and the barn has burned down. Oh, I need to insure that animal. It's almost too late. Let's just be silly and let's just say he did this with stock 10-1.
Yeah.
I like that better. He did 10x stock for every one of these puts. He's just swinging for the fences. The puts are just a little vestigial part of the whole thing, just in case.
Yes, just in case.
Oh, you know what? Just in case, let's just keep on. Let's wipe the sour taste of this odd block from our mouths, listeners. I think the only way to do that is with a little bit of the old strategy block.
It's time to dispense options, wit, wisdom, and education. It's time for the Strategy Block.
All right, it's Monday, listeners. It's Strategy Block time. Mr. Last Emperor, sir, I got a bit of a bad taste in my mouth after that odd block. It wasn't at all what I was hoping for. There's a lot of degenerate, silly premium buying in extremely cheap names. Maybe that guy who wrote that email last week about why do you hate options on cheap names? Maybe he's the one trading all that. Either way, if you guys like options on cheaper names, there you go. You got your fill today. So Mr. Last Emperor, wash that taste from my mouth, sir. What do you got for us today?
Yeah, guys, the only thing that I was thinking about is I pay pretty close attention to UNG in general as an ETF that tracks the nat gas future there, the front month nat gas future. And I remember last October was the time when it kind of exploded to the upside. So maybe it's some sort of a play on nat gas price because maybe, they're predicting a certain movement in one direction or another. I have no idea, but definitely interesting. This was probably by far the most entertaining from I have no idea why this happened piece. What's going on with the strategy kind of views here at Fidelity, what we've been hearing from clients? I've been thinking a little bit about this actually starting last week, and I think this is going to correlate pretty well to what Uncle Mike wanted to talk about as well in terms of risk management and kind of making sure that you are paying attention when markets get topsy-turvy, when we get a little back and forth action in decent ranges. As we're speaking, by the way, the S&P is now positive. We're up 6 handles. We're just down 6 handles. So, just a matter of moments just like that. Looks like the markets are moving higher on some commentary from Chinese trade representatives on national television here. But you never know, right?
They heard all of our talking about options on cheap garbage in the stocks, and it just turned the whole market around, Konstantin. Right there. There we go.
That's probably it. I was going to talk about, the upcoming earnings season, and Uncle Mike mentioned, and Mr. Rock Lobster mentioned the fact that we need something very positive to get us above new highs. And kind of in my view, if you go back, to fundamental investing, company earnings do matter, and I guess eventually they do matter, and we are entering into the earnings season right now. So I just wanted to talk about trades from the maybe risk first, profit second perspective, some of the things that you could do, some of the ways that you could look at things, and specifically we're going to talk about 4 strategies today, but they're very intertwined with each other. So we're going to differentiate between, our general views of what markets are pricing into an expected move. So we're going to talk about straddles and strangles. And then if you are a little bit more risk averse, how you could turn those into iron flies and iron condors, and benefit risks of doing so. So first and foremost, of course, if you're trading these strategies, you need to be aware of what type of an account you have, who your broker is, and what that broker's rule is for trading specific strategies. Generally speaking, if you are a Fidelity client and you have a regular brokerage account with a margin agreement on file, you are going to be able to do naked options if you're approved for level 4 and 5. In an IRA, however, whether it's a Roth IRA or a traditional IRA, you are not going to be able to do naked options. It either has to be cash covered on the put side, or you're going to have to do, a covered strategy like a spread. So net, if you're in a retirement account here at Fidelity, the general concept of a short straddle or a short strangle doesn't apply, because you just won't be able to do it. If you are, however, looking at trading those in a regular brokerage account with a margin agreement on file, and you have a high option level approval, you're going to be thinking about a few things, right? So if we're looking at a straddle, and let's say that we're focusing on same expiration and same strike prices for the sake of the conversation of strategy here today, if we're looking to sell the same exact strikes for the same expiration, and let's say that we are being pretty aggressive and we're going front month at the money, or as close to at the money as we possibly could get to, what are we basically saying with our outlook? What is our outlook in terms of our Greeks exposure with that particular trade? Remember that for any trade, right, you could be flipping it upside down, and obviously if you are long, you would have the exact opposite exposure. So for a short straddle, we always tend to quote it of what a straddle is pricing in into an expected move post earnings. What are we really saying? Well, the market's expectation for a move up or down, right, relatively speaking, post the earnings event. So if you are a seller of that straddle, what you're essentially saying is the market is currently overpricing options, and you're betting that the move is actually going to be inside that expected move. If that's the case, right, you stand to benefit. So with a short straddle, you have almost direction neutral exposure. And direction neutral, by direction neutral, I mean delta. If you can get it absolutely spot on right at the money, if you can find the strike, of course, that trades right at the money, and you're doing both puts and calls, you're essentially getting short delta from the short calls and long delta from short puts, right? So your direction exposure is neutral. You don't care which way it's going to go, so long as it stays within, right, the range of our expectations, and that premium is going to be kept in our pocket. What you do get, however, is short gamma exposure, right, and a whole lot of it, because our gamma values are the highest at the money. And remember, what does gamma really measure? It's measuring our exposure in delta terms to the movement, to the velocity of movement of the underlying. So being short a lot of gamma, you can think of it this way. Listen, you don't want that underlying to move if you're shorting a straddle, right? You want it to be pat and just moving sideways for as long as possible. That's how you get to realize, right, more and more of that premium. So that relates directly to your positive theta exposure. So, time passing by, nothing happening is actually beneficial for you, because you get to keep more of that time decay of premium in your pocket. And of course, you are short volatility, or you're short Vega. That is speaking directly to the fact that you're betting on the other side of what the market thinks is going to occur. So you're saying whatever is being priced in demand terms and volatility terms is actually overpricing it. So you're short Vega, right? So here is kind of the net Greeks of a short straddle. Of course, a strangle is a very similar strategy from the perspective of your Greeks exposure, but you're doing the wings that you're shorting, or the strikes that you're actually selling are going to be wider. Instead of being very aggressive and going at the money, you're actually giving the stock some room to maneuver within a certain range up and down. So now think about, kind of your exposure from the strangle versus straddle perspective. Well, your gamma numbers are still going to be, negative, but not as negative as they would be for a straddle. So you're kind of eliminating some of that exposure. Why? Because you're giving the stock some room to go up and down between now and expiration. You're still going to be positive theta. You're still going to be negative vega. But those numbers, those exposures, right, are smaller. What I do want to mention is when you're thinking about these strategies, it's important to pay attention to the levels of implied volatility. You want to be paying attention to the implied volatility levels going out 30, 60, and 90 days, making sure that you are paying attention to the implied volatility of the options that you're actually trading those expirations. Paying attention to volatility skew, whether it's horizontal or vertical, is going to be a lot more important once we jump into strangles, iron flies, and iron condors. Now, what do we mean by skew? We're talking about different prices for out-of-the-money options, right? Whether they're put skew, so the puts are more expensive than calls, or call skew. Calls are more expensive than puts for equidistant ranges away from where the stock is currently trading. Why is vertical skew so important when you're starting to actually add legs onto your strategy? Well, think about it, right? If you are doing a straddle at the money, there's no skew, right? Implied volatility of one is pretty much equal to the implied volatility of the other, because you need to get, that 50-50 flip of a coin, right? Up or down at any given moment in time. As you start moving away, however, from the at the money options, you're starting to get some discrepancy. And so it's important to pay attention to it, because you are then either selling the strangle and buying the outer wings, which are going to be creating an iron condor, right? So you're creating a bear call spread and a bull put spread below it, or you're turning a straddle into a butterfly, where yes, at the money shorts are not going to be affected by implied volatility skew, but the wings that you're actually buying are going to be affected. So these things are important. I would say that, if you're trying to reduce risk and not take, big swings and shots, probably spreading it out, reducing the risk is going to be more, it's going to be maybe a less risky way to go. You also have to understand, of course, that those spreads, whether they're iron flies or iron condors, they're going to move slower. So realizing profits in those, either on the long side or the short side, are going to be, kind of slowed down in general, and you're probably going to have to apply slightly different rules for target management of those versus just the net shorts or the net longs. But I wanted to turn to Uncle Mike to see, what his thoughts are, given the fact that the S&P has seen, close to 100-point range in the past week here. Any thoughts from you, Uncle Mike, on what we mentioned on how to maybe spread off some of this risk?
Well, I think it's important. You covered it very well with everything. But I think one of the main points that I would like to add to that would be that no matter what you do, there's always some type of risk somewhere. I'm always a proponent of there's no such thing as getting rid of risk. The only thing that you can possibly do is shift risk. So the oversimplified example that you can use is that if you own a stock, of course, you have the risk of the stock going down to zero. But if you buy a married put, then you don't have that risk anymore. Now, by doing that, you've gotten rid of the stock price risk, but you've taken on the implied volatility or the time decay or the premium risk of paying for that put option. So I think that with what you're saying, I think it's very important and very well said, quite frankly. But just as you're going through this, or as you're making your decisions on what trades you want to make, especially with the markets doing what they've done this last couple of weeks, make sure that you understand there's no way you're ever going to get rid of risk. You're only going to simply shift it.
Well said, sir. And we're going to have to shift our focus as well. We're kind of running up against this. We're going to do a bit of a combo of Around the Block and what they can get on our various platforms. There it is. There's that music. All right, let's kick it off. Let's go back around the horn. Let's start in the land of the lobster, Cold Rock. Pick your poison, whatever floats your boat. Mr. Rock Lobster, first off, what are you watching for the rest of the week? And then if folks want to learn more, I hear you got all sorts of new cool things going on, including like texting things over there at Option Pit. If they want to learn more, where should they go? What should they do?
Yeah, we got all kinds of stuff. We're upgrading our service, more interactive texting and live chat when we have trade ideas, stuff like that. That's one thing. Oh, what am I watching though? Take a look at VXX, because if this trade deal, anything happens, you can see a lot of vol in that, because there's a lot in that no future right now, some in the OC, but it could be a swingy little product. That's what it's searching, but check out optionpit.live.com.
There you go. Optionpit.com is the place to go. And Mr. Last Emperor, sir, what are you watching first off the rest of this week? And then if folks want to kick the tires over there in Fidelity Land, where should they go? What should they do?
Yeah, definitely action-packed week. Domino's Pizza and Delta Airlines earnings, those are up in the next couple of days. You have Jay Powell speaking Tuesday and Wednesday, so probably some message from him potentially out there through the questions of media. You have FOMC minutes coming out. You have the CPI data coming out. So some market fundamentals economists are going to be chewing over. So plenty of stuff. And then the Chinese delegation come in and starting talks on Thursday, Friday. They're already moving markets, and it's just Monday. So we probably will see more of this in the next few days. If you're interested in discussing any of this, fidelity.com/coaching for some additional day-to-day stuff that we cover. Fidelity.com/options, of course, where you can open an account and apply for options trading. Always can give me a call if you're already a Fidelity client. Be delighted to speak with you. Anything strategy related on the stock side, technicals, or options. Would be glad to cover it with you in the short meeting.
There you go. Fidelity.com/options is the place to go. And Uncle Mike, while they're surfing around the web, where should they go to find out more about you? And also, sir, what do you got in store? What are you watching for the rest of the week?
stcharleswealth.com is where you can go to find more information on me, who, if you were looking for an advisor who enjoys talking about straddles and strangles and fits them into longer-term strategies, I'm your guy. With that being said, everything to what the Last Emperor and the Coldwater Rock Lobster were saying, along with that 3,000 mark. I think it's a key number in the SPX, and we'll continue to monitor it.
There you go. And we're going to keep monitoring these markets as well as the forthcoming crypto market's going to be getting into those in about exactly an hour. I got another fun guest lined up to join me on that program, so we'll be back at 2 p.m. Central for that. So in the interim, get a break, grab a beverage, grab a lunch. We'll be back in about an hour to discuss all things crypto, options, volume, trends, skew. Interesting stuff. Got a former market maker over there from Deribit to break down what's going on the options side over there. Should be fascinating. Otherwise, we'll see you back here throughout the rest of the week for our usual slate of shows. Stay tuned for all that content hitting the network from STA. Should be fun stuff. And then we'll be back here again on Thursday for more of the Option Block.
The Option Block is brought to you by Fidelity Investments. Fidelity's Option Trade Builder tool can help you confidently build an options trade in 3 simple steps. Just choose a strategy, select a contract, and then review the benefits and risks of the trade. Learn more about Option Trade Builder at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.